Good day, my name is Bianca Haywood and I'll be taking you guys through Unilever's results presentation. I'm going to start off with the nature of business, followed by a financial review, then a geographical overview and a segmental review, and conclude with the company's guidance. Now moving over to the nature of business. Unilever is a multinational consumer goods company that provides fast-moving consumer goods. Its product categories include savory, dressings, ice cream, beverages, personal care, and home care. The company's brand includes Domestos, Dove, Axe, Comfort, Cif, Lipton, Lux, just to name a few. Unilever delivered a good first half results, demonstrating the progress made with the objectives set out by the group. Over the past 8 years, the group has consistently grown both top and bottom line figures. The Connected for Growth program, which was announced last year, helped the group accelerate its performance. The program focuses on making Unilever more simple, agile, and more connected. This means that the group can better bring innovations to the market faster, both locally and on a global level. This helps the group driving continued growth ahead of its market. At the same time, the savings program, which is an integrated part of the Connected for Growth program, enables the group to accelerate its margin expansion. The savings program are also delivering faster than planned, allowing for a higher level of reinvestment going forward. The group stepped up its expansion into white spaces, where the group are more agile and better able to meet the local trends more quickly. Looking at a few examples of what has already landed in the marketplace. The new Persil Power Gems, the first laundry detergent that is made up of 100% active ingredients that makes it twice as concentrated as powder, with less chemicals to get the triple power of stain removal. The Signal Enamel Repair toothpaste takes the group's unique neo-mineral technology, which was originally introduced in a product called Regenerate, which was priced as a super premium brand, and now applies it for the first time to the group's mass brands at a very affordable price. And then you have the Magnum Double, using double dipping technology to create a double layer that now includes new raspberry and coconut flavors. Now let's look at examples of launches which are happening right now. The Hijab Fresh is an example of an entirely new brand. It was first launched in India and provides a solution to the specific needs of the Muslim consumer. Then you have Baby Dove, an example of the group entering a new segment. It was first introduced in Brazil 3 years ago and is now in 19 markets, with the US and the UK amongst the recent launches. The group also just now introduced Omo into Iran, an example of the group taking an established brand into a new country. And then the group continued to expand its acquired brands as well. Examples would be Tresemme, that's just entered 25 new markets since the group acquired it 7 years ago, and is actually now entering China. Dermalogica is also now entering China. The group also introduced Grom ice cream into the in-home market for the first time, an example of the group entering a new channel. A few examples of many initiatives in the market that showcases the group's local agility of the Connected for Growth program includes Lux Bontanafik, developed by the local team. It takes Lux into the premium natural segment in Japan, already available online with the full launch next month. Breyer's Delight in the US. It's low in calories, high in protein, and priced as a super premium brand. Launched at an accelerated pace to hit the summer season in the US. In Thailand, the country ended a long year of mourning following the death of their beloved king, and within 2 months the group's local team had launched a new laundry detergent to help people wash the black clothes that they are now wearing. In Italy, local foods team introduced a natural liquid bouillon under the Knorr brand, taking the idea to launch in just 4 months, working with third parties to develop and manufacture it. And another example from Italy, the home care group launched a combined spray and mousse under the Cif brand, expanding rapidly to the local competitive development, working closely with the global teams and the digital advertising team. And finally, you have Dove Sakura, a season limited edition in China, taken from idea to launch in just 5 months. Now moving over to the financial results. Turnover was up 5.5%. The underlying sales growth was up 3%, mainly due to price, as volumes were flat. The group still performed ahead of its market, and all the categories and subcategories, with the exception of spread, showed growth. Excluding spread, underlying sales was up 3.4%. However, over the remainder of the year, the group expects an acceleration in volume growth and a moderation in price growth, mainly due to less pressure from commodity cost increases in the second half of the year. Mergers and acquisitions increased turnover by 0.8%, largely due to the acquisition of Dollar Shave, Blue Air, the seventh generation. This was partly offset by the disposal of Odessa at the end of the first quarter. Currency translation increased turnover by 1.7%. This comes from stronger currencies in a number of emerging markets. A positive effect from a stronger US dollar was offset by the weaker pound sterling. Now moving over to the operating margin. The underlying operating margin increased by 180 basis points. Gross margin was up 40 basis points. The supply chain savings of more than 500 million euros have largely been reinvested, as a price increase of 3% was below the pricing that would have been needed to offset the commodity cost increases in the second half of the year. Brand and marketing investment was lower than last year by 130 basis points, mainly due to strong and fast delivery of the savings and productivity gains from the zero-based budgeting program. Overheads improved by 10 basis points, mainly due to the benefits of the savings program, which have largely been offset by higher overheads associated with new business models that the group have been developing and acquiring to strengthen the group's position in the direct-to-consumer e-commerce. Now moving over to underlying EPS. Underlying EPS increased by 14.4%. Operational performance, which is a combination of growth and margin, contributed 16.9%. The underlying tax rate was higher at 27.9% compared to 26.1% last year. The group expects its full-year tax rates to be in line with its medium guidance of around 27%. There was a small gain from share buybacks, representing the impact since the program began in May, and currency movements had a favorable impact of 2.6%. Now moving over to the geographical review. Asia, Africa, Middle East, Turkey, Russia, and Belarus grew by 5.5%, with volumes up 0.8%. However, in the second quarter, volumes was actually down by 0.6%, impacted by fewer shipping days in Indonesia, and the trade destocking in the transition to the new goods and services tax in India. China returned good growth in the first half, driven by rapid expansion in the group's e-commerce channel. Latin America demonstrated resilience and grew by 5%, with volumes down only 1%, despite a sharp market contraction and trade destocking in Brazil. Mexico delivered very strong growth. North America grew by 0.3%, with volume down 0.2%. Excluding spreads, the region grew by 0.9%, with volumes up 0.3%. In Europe, both underlying sales and volumes were down 0.8% and 0.6%. If we were to exclude spreads, both underlying sales and volumes were slightly positive. Consumer demand is still weak in Europe, and the retail environment is challenging in much of the region. However, the group is seeing good momentum in Central and Eastern Europe, as well as Spain. Now moving over to the segmental review. Personal care grew by 2.6%, with flat volumes. This was against a really strong comparator of 5.7% in the first half of 2016, which was largely from volume. The three biggest personal care brands, Dove, Rexona, and Lux, and the largest brand in prestige, which is Dermalogica, all grew mid-single digits. However, the trade disruption taking place in Brazil, India, and Indonesia particularly affected volumes. Management expects to step up its brand and marketing investment in the second half of the year and expects an acceleration in volumes. Home care grew by 3.3%, with volumes up just under 1%. Comfort fabric conditioners continue to grow, and in Brazil, Unilever's value brand, Brilliant, delivered or benefited from consumer downtrading. Foods grew by 0.6%, with volumes down 1.7%. Excluding spreads, which declined by 3.7%, underlying sales from food were down 2%. Knorr, Unilever's largest brand, grew by 4%, driven by strong growth from cooking products in emerging markets, partly offset by a decline in some of the non-core brands such as pot noodles in Europe. Refreshments grew by 6.1%. Ice creams were up 7%, driven by innovation in brands like Ben & Jerry's and Magnums. Tea grew by 5%, driven by specialty teas. There was a drag to the overall refreshment growth from the decline in Ades, which were disposed of at the end of the first quarter. Now moving over to the company's prospects or company guidance. Unilever made significant progress with its Connected for Growth program. Unilever achieved more than €1 billion savings in the first half, which places the group well on track to achieve its savings target of €6 billion and a targeted underlying operating margin of 20% by 2020. The zero-based budgeting, which focuses on improving productivity in brand and marketing investment as the group reduced the overall cost of advertising production. Management expect underlying sales growth ahead of the market of between 3 and 5%. Management further expects robust growth in the second half of the year, supported by continued investment in marketing initiatives. The underlying operating margin is expected to improve by at least 100 basis points, while cash flow is expected to remain strong. This concludes my webinar. If you'd like to trade, please contact our trading desk. Thank you and enjoy the rest of your day.